This conference will now be recorded.
Okay. So last time we talked about the accounting cycle and steps 1 and 2. We did the first couple of weeks. Then we spent a week or so on steps 3 and 4, posting to the ledger and preparing the trial balance. 5 and 6, we're skipping now. We will come back to that later. And we're on steps 7 and 8, preparing financial statements and closing the accounts. So those are the steps we're working on now. Transaction types, you should always have this handy so you make sure you can make journal entries. On this chart of accounts, I told you last time, look at these normal balances that an account is supposed to have. That's the normal balance that should be in the T account as well as the trial balance. So if accounts receivable has a credit balance, you know that something is wrong. So this becomes very important. Here's our problem here that we looked at. Close to the ledger. So here's a trial balance. Always in this order: the assets, the liabilities. They don't have any common stock here to have retained earnings, then the revenue and expenses. Always in that order. Now, we're looking quickly at how to prepare income statement now, and I'm just having you transfer things over. But I expect on the next assignment that you will adjust that template for income taxes, which you will begin to put in. So most of the things are here, but I expect that you will adjust the template to look like this. So this is how it should be looking, pretty close to being the same, except you got to adjust it for that. Statement of retained earnings, very simple. Retained earnings, beginning of the year, plus a net income. Put the subtotal line in also. So we just come straight back and subtract, but especially when we got a beginning balance, as we will have, put your subtotal line in. Less dividends gives you retained earnings at the end. So you would just insert that on your spreadsheet in the future. Then let's look at the balance sheet in terms of how it is supposed to look. And you'll see that we have the current assets, then we have the long-term assets, total assets. Then we have the current liabilities, the long-term debt, then the equity. And we do this because in looking at a company, these current liabilities are due within a year, so you need enough current assets to pay it off. So as we're looking at a company, it becomes very important to have, you can't convert land and buildings to pay current bills. So we show current assets and we show current liabilities, and we're always looking at that ratio to make sure we can pay these bills as they become due. So that's important for a company. So this is how I expect the balance sheet to look when you assign those 40 journal entries and you do them. So when you assign the 40 journal entries to get that ready.
Okay. So do you keep them organized?
Say that again.
So basically just keep them organized?
Yes, you'll need them.
Yes, sir.
There are 3 assignments we're working on. One is today, where we're looking at that quiz and having you simply go through it so you get a sense of it. So that's why I didn't want you to do 40. I didn't want the journal entries to be an issue. Next, each person will take the test they worked on, and they were sending this information individually. So the trial balance test, that's an individual thing. So you have to learn to work with that. After that, each team then will come back and do the 40 journal entries and prepare these 3 statements and the closing entries. An income statement in this format, a statement of retained earnings, and then a balance sheet in this format. Then as we move to midterm, this will be the first year, and you'll be given journal entries for a second year. And in that second year, it starts with journal entry 41. C students will get about 12 to 15 more journal entries. B students will get 18 to 20 more journal entries, and A students will get 30 more journal entries for year 2 or so. So something along as I get those laid out. So they will be, so this time, the study problem is going to be different for everybody. So before they were the same, you go checking around, that won't quite be what you'll be able to do on the next set of journal entries. We also will start with a set of quizzes. So we won't do the quiz today, but we will do a quiz on Tuesday, simple basic quiz on Tuesday, looking at what we've looked at today. And then we will do a little more complicated quiz on next Thursday. And the following Tuesday, a little more complicated than that. And the complication is that you'll get a trial balance looking like this on Tuesday. On next Thursday, you just have the accounts over here and you won't have the balances. Then the following Tuesday, you won't have balances and the accounts will be in alphabetical order. And so you're going to have to go then and create the trial balance. So you have a trial balance created on Tuesday. You'll be creating a simple trial balance on Thursday and a complete trial balance on the following Tuesday, because you're just going to have accounts and balances in alphabetical order. And true A students will make A's on all 3 of those.
Excuse me, Mr.
Yeah.
Boyd. Are these examples that you're showing, this example sheet, this balance sheet example, is it posted on the course content for us, like the view and everything, or no? Or you just have it on here?
This is coming out the primer. So you're supposed to have your primer. You got to have your book, you got to read it before I do. Watch me go through it and read it afterwards. So you should be getting your primer. It's a copyrighted book, so I can't just continue to send pages out.
Okay, so basically this is in the book.
Yeah, it's in the book. See this book here?
Yeah, I bought it online.
Okay, so it's good, and it's in the book. So this is the book that I'm scrolling through. So I'm happy you have the book. And I'll stop right down now. If it was Williams, Ms. Williams, I'd ask her why she wasn't reading the book, since she's an A student. Okay. Here are our financial statements. That 40 journal entries will be our beginning balance sheet. Then you're gonna have some income in terms of what happened. Cash flow statement we do a little bit later in terms of what happened with the cash. Then we have an ending balance sheet, but we also have a statement of retained earnings that we're doing. And that wasn't in this, this is just a picture I pulled up. But it talks about how much income was retained in the business. So the income statement, how much income we made, we got to pay taxes on it. Okay, we have some income, what our assets look like and liabilities look like now. And then the statement of retained earnings looks at, if we got income, how much of it did we retain in the business? So we go back here, begin retained earnings plus net income less the dividends. These are the earnings that stayed in the business. We paid this dividend out to the owners. Okay, finally, we looked at some closing entries last time, didn't we? Everybody's friend. See if I can get to the closing entries.
Professor Boyd, what pages are they on primer?
Say, let's say 56, so you see page 56? So closing entries actually start, assuming our pages are the same, would be on page 52. Okay? So assuming, let me just see. Yep, same page, 52. Is anybody having trouble getting the book at this point? Okay, some other people are having problems, just checking. When we run a company, we have permanent accounts and temporary accounts. The temporary accounts are retained earnings accounts that we utilize so that we can calculate income and expenses. But once we've done that, then we close those accounts out. We close those accounts out because we have to do the same thing again the next year. We could put all of the revenue, expense, and dividends interest into retained earnings, but it would be very difficult to prepare those financial statements that we just did, that we're doing. And so we put them in separate accounts temporarily until the end of the year. We do the financial statements, and then we close them all out. And we use an intermediate account income summary for part of the closing, so we only have a couple of entries in retained earnings. And we'll talk about that in a few minutes. This is the key chart. There are 4 closing entries. In the first one, we close out all revenue accounts by debiting revenue and crediting income summary. In the second one, we close out all the expenses by debiting income summary and crediting expenses. So, in that 40 journal entry problem, we have a whole lot of expenses. We don't want that information going into the retained earnings account. We want one number. So when we get to journal entry 3, the difference between these two numbers, the balance in the account, the difference between revenues and expenses, that's journal entry 4, where assuming we have income, we debit income summary and credit retained earnings. If we had a loss, we would reverse it. We debit retained earnings and credit income summary, and that's a situation we don't want. The 4th closing entry, we close out the retained earnings. We debit retained earnings and credit dividends. So let's go back and look at our problem where we had this trial balance. And what we said was, everything from retained earnings up is a permanent account. Okay. it goes on the balance sheet. We still have it. Everything below retained earnings is a temporary account. And in fact, everything from dividends, below dividends, goes on the income statement. Dividends are amount we pay to owners, so it's not an expense, but it is a distribution. And all of these are temporary accounts. So at the end of the day, we're going to close all of these accounts out. These are all temporary retained earnings accounts. Okay. So we first of all, we prepare an income statement. Revenue less expenses, gross profit. Less cost of goods sold, gross profit, less rent expense. So cost of goods sold is just another expense, but since it's the cost of the sales, we put it up here. Then these are operating expenses, net income. Then we do our statement of retained earnings. Notice that we had a beginning balance of $15,000 in the retained earnings. We add the net income, we bring it down and add it. We subtract out the dividends, and this gives us our ending retained earnings statement. And this is the retained earnings number that we eventually want to be on the balance sheet and in the T account. So when we finish our posting, we want 305. So we do the balance sheet, and you can see that this number is in here at 305. If you don't put the 305 in, you won't balance. Okay? If you don't put you got an old retained earnings and a new. And because you're closing out all of these accounts below that, you got to put the new retained earnings in. Then let's look at the closing entries. In the first one, we debit service revenue and credit income summary. So we're closing out what? The revenue. Erased all of these out. So we have retained earnings here. We have retained earnings here. We have the income summary here. And we had dividends here. On the next line, we have what?
Sales.
Why this thing is jumping like that? I'll go down one. Sales, S-A-L-E-S. And what do we have here?
Cost of goods.
C-O-G-S. And what do we have here?
Rent.
How much money we got in rent?
100,000.
Cost of goods sold?
300,000.
And sales?
700,000.
And this retained earnings account had a credit balance of what?
15,000.
And once we finish our closing entries, how much is supposed to be in retained earnings?
305,000.
Okay, 305,000. So when we make this first and then we post it, we're going to credit the income summary. We're going to debit sales. So this account now is closed out. Okay. Next, we're going to close out the income summary, the expenses, excuse me. And so we now are going to debit income summary for 400,000. And we will go through and credit cost of goods sold for 300,000. And we credit rent for 300,000. So now we can go ahead and cross those out. So now all of these accounts have zero balances. Then we have 10,000 up in the dividend account. Okay. Then in our third closing entry, we said the amount in the third closing entry was always what? Don't all speak at once.
You said what now?
The amount in the third closing entry is always what?
What's it's gonna be the 300,000, I believe.
You believe.
It is.
Okay. So then we credit it. So what does that 300,000 represent?
That's the income summary.
I tell you,
Let me go.
said something 3 times last time. All right.
Your
Then,
net.
then we're going to post this last one. We'll get to it in a second. We're going to close out the dividend account. And we're going to debit retained earnings now for 10,000. Because we got to get 10,000 in the T account. We got to move from 15 to the appropriate amount. So whether we said the amount in this T account was going to be
305.
so it's only 4 closing entries: revenue, expenses, net income, and dividends. And once we've done that, if we go back to the trial balance, all of these items now have been scratched out. And this number now becomes these are just temporary retained earnings accounts. Once we've used them to get these statements done, pay our taxes, we close them out so that we can begin again the next year. So we close them out so that we can begin again the next year. Any questions? Everybody do this now?
Yes, sir.
Okay, well, we're ready for the quiz then, I guess.
I think we need another practice.
I don't know about that.
I thought we had a discussion
I don't think we're
already,
ready
and
for
I
the
told you
quiz yet.
people was like still hefty.
I think it'd be good. We at least we have practice a little bit more, then a quiz.
They want to practice a little bit more than a quiz.
Yeah, we're not ready for the quiz yet.
Yes, sir. Because
Yeah.
I'll make sure I learn this.
Y'all was saying you knew it, so I'll just go with what y'all said.
We got an understanding of it. I'm not sure we understand. Like,
Yeah, we
no,
we think we get it, but we have to practice it so that we know for sure that we get it.
Oh,
Right.
let me see here. Let's see if I can. I don't want that one. Okay, let's see. I'm just looking at the problems that have been turned in. Okay, so okay, so who do we have here? What team is this? Team 1, 2, 3, or 4? Or nobody?
Go to the. Can you go to the journal entry part?
I don't have any journal entries.
Look down, yeah, move the tab, go over.
Okay.
And go over one more. I think that's 4.
Okay, this is 4.
Yeah.
So we had 13 journal entries.
Yes.
And we had these T accounts. Permanent accounts, temporary accounts. And can always just file a template, because what dividends is a temporary account too. But I won't hold that against you. Okay, so let's look at this trial balance. You have it in here, it's 0, and you got it in parentheses 50. So initial trial balance is 455. So then we did the income statement, took the 130 over, took the 3 expenses over, 60,000. Are there any questions on how to do the income statement? Are there any questions on how to do the income statement? Everybody can do an income statement. Speak
You
now.
talking about like the actual form that you're using before you do the closing entry?
Talking about right here now, just a simple.
No, can you go over that? Because that's what I think that I've missed before going into the. Because after that step is the closing entry, right?
No, we got to do 3 financial statements, then the closing entry.
Yeah, can you go over the financial statement then?
Okay. First, we do the income statement. That tells us how much money the business made. So we're going to go to dividends, and we're going to, I forgot this not word. Well, you just have to know it's under dividends, maybe. Where's my, I have to look for it over here. Page layout formula. Is this home? Oh, okay. Now maybe I can underline dividends. So we got that double underline on dividends. So everything below that double underline goes where?
Under expense.
It goes on the income
On the
statement.
balance, yeah, the income statement.
So you must keep your accounts in order, of the chart of accounts, to be able to do this. And so we take the sales number 130, we put it right here. There's no cost of goods sold in this problem. So the gross margin is 130. Then we take the 3 expenses, 40, 20, and 10. We put them here. We add them up, 70. So our net income, remember, income is always revenue minus expenses, 60,000. Can everybody do a little income statement, maybe?
And yes,
Yes, sir.
you just use that sheet over there and put sales and the 3 expenses under it.
Now, you might have more than one sales account, typically one, but you might have 15 or 20 expenses, okay? But you just take them all over. It doesn't matter. Got it?
Mm-hmm.
So don't get hung up on the 3. It could be 5, 7, 8, 10.
Yeah, just however many expenses this.
The next statement is very easy. Beginning retained earnings, we had a 0. We add the net income. Then what did I ask you to insert in here?
The dividend.
Well, I told you to insert a line in here so that we can do a subtotal at some point. So it's not there now, but we won't worry about it. But when you do it from now on, just put a subtotal because you have a beginning amount. So we subtract out the dividend. And so this tells us how much income was left in the bit. We made 60. We bring the 60 here, subtract out the dividends that are on the trial balance. Here we are. Any questions on that?
No, I'm following.
Oh, great, Gayla. We may be able to have that quiz there, though. Okay. Now, on the balance sheet, we now are going from retained earnings up. We put the assets on one side. So we got cash, receivables, inventory, land. They all come here. You notice they've already got their land as a long-term asset. There must be an accounting major in this group. So the total is 375. Okay. Then we put the liabilities and stockholders' equity over here, and they must equal. We put the liabilities first. Accounts
I have a
payable.
question. I'm sorry.
Yeah.
Um, for the balance sheet with the current assets,
Mm-hmm.
I'll never man I see it. I thought that you added all that whole column together. I was gonna ask how did you get 375, but those are 2 different totals.
Mm-hmm.
Okay. All right.
So yeah, you'd add the 2 subtotals together. So you write it in that line 36 and 40 are total to get this line. Then we come up and pull up our liabilities. And we keep our liabilities typically separate because we should have liabilities and then stockholders' equity, because you need to know if who your company owes, and that's important. So we would separate them out, but we have two liabilities. Three. That's it. Accounts payable short-term note. So we had three liabilities. So we should have totaled these liabilities, Team 4. And we should have had a total number. Let's see. Let's see if it'll let me insert. So we should have had here total liabilities. And we would have added these up, and how much would we get for total liabilities? It would be 285. Did I add it right?
Yeah, you added it right.
Okay. Then
I thought it was. I think it's 290. Oh, it probably is 285.
It's
Never mind.
285.
Okay.
let me show you something. See, I got those highlighted. Why could I add them so fast? Look right here. See that?
Mm.
So when you highlight something, it adds it up for you. And that's important when you go move somewhere else. So now we'll get to, let's see, stockholders' equity. So see if I can put that down here. So we're going to put that down here. Okay. Then we got the retained earnings, and that was what, 50,000? So I'll put the 50,000 here. And so our total stockholders' equity was what? 90,000. And hopefully that gets us to 325 and we're balanced. So we always want one, eventually one subtotal over here, total assets. Then over here, we want to show what the liabilities are. We got assets 375. It's important to know that the liabilities are 285. Then the stockholders' equity, what you put in the company and your earnings that you retain is 90 for a total. So that's how a balance sheet looks, okay?
Got
Yes,
it.
sir.
Okay, so given this information, then you all make the closing entries. Take out a sheet of paper based on this and make the closing entries. Make the closing entries. Take out a sheet of paper and make the closing entries. Y'all said you understood.
Can
I
you
thought you
click on the closing?
another. Yeah, I thought you was gonna do one more closing entry.
One more what?
Closing entry.
Yeah, I want you to make closing entries.
Can you click on the closing entry tab so I can see how it look?
I have to move out of these. Okay. Does everybody have these numbers down?
Oh no, I just need you to click on it right quick so I can see how it looks.
So you can see how it looks. Okay, let me see if I can get. Uh,
Dr. Moore, do you want group 4 to do it over since we already did it? It's always tough. So
I'm gonna grade it based on what you sent in.
what we sent in, like what you looking at right now?
That's what I'm gonna grade.
Oh.
Can you scroll down?
So you must carefully work on things from now on and send them in. So you see how they look now?
Hey, can you go back up so that I could get the closing entries? I was screenshotting it as soon as you scroll down.
Closing entry. So you should, like I say, you should have this with you now all the time. You get ready for tests. You close out the revenue first, then the expenses, then the net income, then the dividends. It's 4 closing entries. You know, revenues, expenses, net income, and dividends. Revenue, expenses, net income, dividends. Those are your 4 closing entries. Got it? Ready to go back now?
Yes.
Where were they at? Got the right one. Oh, that's not the one, is it? No. This is it. Yeah, I think this is it. So now see if you can make the 4 closing entries. At least you got a few minutes on that.
Okay, so I'm still kind of confused. So for the closing income or the closing entries, are we just putting the amount that is left on the charts or on the statements? Because I am not following on the closing entries. He probably left. I don't
Right.
think he.
He leave?
Yeah, I think he did.
I don't even know what the fuck.
On here? No, she's not.
Do
I'm
y'all get it?
confused. No.
So do you supposed to like just use the numbers? Group 4, did y'all do it correctly?
We're not sure if we did it correctly, but we did it.
Basically, for the first one, you take the sales, which is the amount of the sales on there on the balance sheet. So you're basically looking at the balance sheet.
Yeah, so you're basically doing like another like basically journal entries again, but for like uh but for everything that's under which one is that first one? Sorry. So what's in the income statement thing? So that's basically what you're doing the closing entries for. So it's like sales and then income sales, and then you just keep doing like the 130 for sales, and then like it's really hard to explain.
Can y'all like put it on the group me?
Yeah, hold on.
Because I'm trying to understand it. I just want to see what it looks like on y'all's. If whoever knows how to do it.
Right.
Okay, so everybody have the summary of closing entries in front of them, where they can see like the closing entries is 4 steps. So everybody have that in front of them.
The list of the closing entries.
Yes. So when
So
you,
basically, what he was doing when he was crossing out the like numbers and stuff, you're
but no,
gonna do that
that's not the part that
and the
he
first
wants them.
step.
But
No.
that's not the part he wants them to do.
You
Yet.
talking about
Or
from
just
the book?
the journal entries.
He's not on the cross out entries yet. He's not on crossing it out yet. It's just the, the one, and then you got sales, and then you debit the revenue, and then you have the income summary. So it's the journal entries again, but it's just 4 that you're gonna do this time. That's it. That's the part he's on right now. And that's what he did when he did it yesterday. He did it off to the side. So like for the first closing journal entry, the closing entry, it'll be sales, and then it's the what is it, 130? Because that was our total for the sales. It was 130,000. So it'll be on the debited side. And then you'll have income summary, which will be 130,000 on the credit side. So basically filling in what's on that's what's already you just plug it in.
Wait a minute.
So you just have to go the
Where
income.
did income summary come from?
I see sales. I don't see income. Sorry.
That's like the other part. That's the credited part of it.
Yeah.
Okay. Let me make sure I'm following.
look at the thing. Hold on. I'm look at yeah.
Okay, so it's gonna be income summary. For the expense, it's gonna be
For the expenses, the income summary for the expenses is 70,000. It's
gonna
the
be
one number for each step. It's one number. That's it.
yeah. So it's gonna always be one number that's gonna be the revenue
Right.
expense debit,
Exactly.
and then
The income summary is just saying the full amount. It's just one number. So when you do the instant
can
savings,
somebody mute their phone or something? Because I don't know if it's her. Can I mute my phone, please? Okay. Can you go ahead, Latanya? I was listening. So the income for the next one, it will be the income
so
summary.
you go to where it has the operating expenses, correct? And you
Yes,
see how salary, advertising, and interest,
all
and
of those was
it's
70,000,
70,000. So the
correct?
income summary is 70,000,
For the
which
debit.
you will put your debit, right? And the expenses are all 70,000. So you'll put it on the credit side.
Got you.
Yeah.
Okay. And
So
then
that's
so
what
next.
you're doing. Yeah.
Okay. Thank you.
You're
That's
welcome.
there now.
It's okay. She had to explain it to us too.
Yeah, I had to sit and play with it for a while to understand.
So what were we waiting for?
Waiting to see if you got it right. That's what we're waiting for. Who's that talking? Seeing what we're waiting
I
for.
didn't even know you was here. I was waiting for you.
All right, Lee, what's the first closing entry? Give me the first closing entry.
Yeah.
Derek Lee, since he was talking. Janet, you can have the second one.
Don't ask me. Shit, I'm still trying to figure out myself.
You said who can give you the second one?
Can I attempt this?
Is it
I'm
sales?
gonna say I think I know the for the first one. I
All right,
think
what's
it's
the first one, Caleb?
huh?
What's the first one?
I think it's sales. It's gonna be 130,000, and then no revenue first.
The sales
No,
do the same thing.
yeah, sales and then income summary for the credit.
Okay.
Is that correct?
That is sales and credit income summary. That's correct.
Okay. Then the next one is the expense, and it's gonna be income summary. Debited 70,000,
What you gonna
and then
credit?
the expense is credit 70,000.
No,
Why not?
you got to credit each expense.
Oh, oh, okay. So will we credit them separately?
Separate lines.
Okay, so it'll be salary, and they'll be for their three, and they all equal to 70,000. Okay,
They'll
got
all
you.
be listed on there.
Yeah, I
You
see.
have them all listed. Yeah.
Okay, so sales for 40,000, and then 20,000 for advertising, and then 10,000 for interest will be credited.
What's the third closing entry?
Is it retained earnings or income summary?
Both of those.
You said it's both of them?
Both those accounts.
Okay, so both of them are going to be credited. No,
I
debited. No, they're
didn't
going to be.
I didn't say that. Debit still got equal credits.
Wait, what'd you say?
Debit still have to equal credits even in closing entries.
Oh, okay. Yeah, no, I understand that. But I'm saying for the count that's going to be debited, it's going to be. Oh, well, it says net.
I
It's
thought
net.
you took a screenshot.
I did. I'm looking at it, but it says or, so either or. So it's income summary or retained earnings for debited
Okay,
or.
in one case we have income. So you're only working with the top part of that screen.
Okay.
Don't worry about the bottom part. That would occur if you had a loss. Let me go back. Hopefully
Wait
y'all
a
have.
minute. You talking about the top part? You talking about the top part on the other side of where it says returned earnings?
No, he's talking about, it says income summary or retained earnings. And then on where it says explanation, if you have a net income, it's going to be income summary debited and return earnings credited. But if you have a net loss, it'll be return earnings debited and income summary credit. So it's one or the other. You see
Yeah.
it? That's what
Mm-hmm.
he's saying. So because you're using the top one, it'll be income summary and return earnings. That's the
Okay.
one. Yeah.
So income will be debited and then.
Return earnings will be credited.
So that's the case that you have when there is net income. But I'm just showing you the other scenario. If there was a loss, you would reverse the debit and credit.
And net loss is when your business is losing money, correct?
Correct.
Okay.
A lot of businesses lose money too.
Yeah, I think that's what happened to us, if I'm not mistaken, but I don't know.
Tell them to let you see the financial statements. You taking accounting. You better help them out. And so have y'all made that journal entry yet?
Which journal entry? Are you talking about 3 still?
Yeah, 3, yeah. Have y'all made it yet?
Is the group 4 able to do it, or you just want us to sit back?
I'm here. Are you talking about the closing entries? Because I don't think I did the closing entry when I submitted.
Yeah, I noticed.
That was the whole assignment.
So why did, like I said, you all better get y'all some tape recorders. Didn't play the tape recorder on what I said do. Let's see. Options. Okay, so let's go back to the closing entries. So here are the 4 closing entries that are made. Okay, you close out the revenue first, debit sales, credit, income summary. Let's look at that posting where sales would have had a balance credit of 30, you debited and you credited income summary. Then for the salary, for the expenses, they had debit balance, so you're going to debit income summary for 70,000. and you will credit each expense. So as these expenses are credited, they're closed out. Then the third closing entry is the net income. So we're going to debit income summary and credit retained earnings. And so you see, we don't have all of this information in retained earnings. We know that this is the income number. Then we post the dividends and close that out. And so our new retained earnings, which originally was 0, is now 50,000. And all of these accounts have been closed out. That's what you got to be able to do on Monday. On Tuesday, excuse me. And I'll be in office hours with the 01 number. So it's the 01 number on Monday and the 02 number on Wednesday.
So that IS stands for income summary. So on the left hand side, I believe 1 through 4, that's like the closed entries that we're doing. And
So
then we have to have this chart on the right hand side and close them out
yeah,
on
those
what?
accounts. So you got to close out the T accounts.
And the T accounts, so you close out the T accounts are the ones that are like temporary or
The temporary ones. So we
and
put
we'll
them,
scratch out.
yeah, so we put them here so you could see them. They would actually be back over here.
But we cross them out over there.
Yeah. Well, we just got them both places. For teaching purposes, we have them here with the closing interest so you could see it better.
Okay, I guess so. Can we redo our assignment?
Yes, you should redo it.
But I'm
Yeah.
talking about like redo it and turn it in because I don't think group 3 turned in a closing entry.
We'll work with you got to turn in, so you got to get used
I'm
to
saying I don't think we like did that at all.
well, I'll grade what, I got the grade what somebody turned in for the journal entries. I'll grade what was turned in.
Wait, what?
And you go and you correct that, and then but you still should be corrected so you be ready for the quiz.
Yeah, I understand that, but I'm saying our whole assignment, I don't think we did a closing entries. But you said somebody turned in 40 journal entries.
And I didn't ask for it.
I'm confused, but okay.
Well, I'm just saying they turned in that, so they'll be graded based on that. So you graded based on what you turned in.
Yeah, we didn't do the summary for the closing entry.
Right?
Yeah, that's what
Like, we didn't close it.
Did I tell you to do it?
Yes. Is that what this assignment was supposed to be for the group?
Was supposed to be the
I
quiz.
thought we were filling out the income, the balance sheet,
It's
and then the retaining and all of that. I just filled that out. I didn't fill out the other.
It's supposed to be the quiz that every group took. Like every group had the same quiz, and you're supposed to be using that to do this assignment.
Yeah, the 13 assignment. Yeah, no, we get that. I'm saying we were supposed to turn in closing entries, correct?
Closing the balance statement, all that.
Yeah,
all
that's
the
what
stuff he just went over was supposed to be turned in.
Yeah, that's what I'm saying. We did everything except the closing entries. That's what I'm saying. That's what I'm trying to tell as a boy.
Well, my question was, did I tell you to turn them in?
I believe so.
Okay. And you didn't turn them in. So you can't get paid because you didn't do the work on time. You got to turn your work in on time, correct? So this is not a long assignment, but you got to learn, okay, we got to, work on this, get straight what we're supposed to do.
Okay, and what was this about we turned in 40 journal entries? What was
Somebody
that about?
decided to turn in 40 journal entries.
From group 3?
I don't know. I don't know what group it was.
Oh, okay.
Their reading of the problem was they would turn in 40 journal entries. Now that will be due eventually, but that wasn't what was requested this time. And so you find out who's the best listener in your group and get him to figure out what's being requested. Then one person can, as some teams do, they'll come in office hours. Let's make sure we got this straight. You got to do it ahead of time. You can't do it after the fact, and then I just continually grade stuff. That's not going. I give you a little break the first period, but now no. So we got office hours, emailing, whatever. But I prefer the office hours, but whatever it takes. But you need to get things right when I get them in. I don't, I got 2 classes of this and then another class after this. And so, I can't continue to go back and grade. So I want you to be diligent. And I guess you all see the points you got. So it's not going to kill you, but you need to know, okay, I need to get this pretty much right the first time. Okay? You got to pretty much get it right the
Yes,
first time.
sir.
And so you got 10 people, one person can get in office hours and check. So going forward, you get in the office hours and you check.
I'll see you Monday then, Professor Boyd.
Okay. So we'll have a quiz on Tuesday on a simple one like this. You should go back, you should go ahead and correct what you sent in. Then everybody individually has to send in the trial balance exam that you just took. So I will eventually get those trial balances in there so you have them correct. But then you got to do that on your own. So we do it as a team, then you do it on your own, then we'll come back at a team later. So we'll get there. It's new and it's different. You probably need to be getting your books, things like that, and read. It's not that expensive, but you pay for the course. Now you want to do well in the course. So you got to do all of those things. And of course, we're virtual like this. And so since we're virtual, then you got to have your materials and everything. Putting you in teams, so a lot of the work is done as teamwork. It's not individual. I wouldn't have used it as much. On the other hand, the teams are so you will work outside the classroom to get things done. But the team has to, be online together, talking and working and everything. Can't let somebody just do the work and then sign up, and then you take an exam. So let's get a little more diligent, be more forceful and accurate on what we turn in. Have a person come into the office hours on the team to make sure it's correct. So when it comes in, that's it. I don't want to read it but once. We got it?
Yes, sir.
Okay.